What is going on, guys? Nick here, back with another video. Visa has long been one of the cornerstones of the stock market, making up one of the Dow 30 for the past 8 years. And while it seems to be one of the best no-brainer companies to add to your portfolio, the stock has really struggled lately. While the stock market has risen by 85% since the March 2020 low, Visa has only returned 34% after it fell 21% after they hit their all-time highs in July of 2021. So in this video, I'll take a look at what happened to Visa stock and why it fell so much. I'm also going to take a look at the business and figure out what the stock is worth. So what happened to Visa stock? Well, on July 28th of 2021, Visa reported a very solid third quarter earnings report. Earnings came in at $1.49 versus $1.34 expected, and revenue came in at $6.1 billion versus $5.86 billion expected. This earnings release came out when the stock was trading at its all-time highs around $250 per share, and again, even though they reported very solid numbers, the stock ended up dropping. Investors raised concerns about payment volumes not returning as quickly as the Delta variant was dominating headlines. Most of the concern was focused on cross-border payment volume. In other words, Visa purchases made in person across international borders. Now, these payments are actually a little bigger of a deal than you might realize. They actually make up a pretty good chunk of Visa's revenue, and they provide higher margin transactions. Visa CFO Vasant Prabhu said during the third quarter earnings call that when borders opened up, inbound purchases made on Visa cards rose by 20 to 30% compared with the same time span in 2019. Just 3 months later, in October, Visa reported its fourth quarter earnings. They again beat expectations, reporting $1.62 earnings per share versus $1.54 per share, and a slight beat on revenue with $6.6 billion versus $6.5 billion expected. So the stock responded by doing exactly what would make the most sense. It fell 4.5%. But the reason it fell wasn't because the numbers reported in the earnings report. It was Visa's forward guidance. Visa was reporting that while the business was on track to recover from the pandemic, it wasn't back to normal yet. While they saw a 30% increase in revenue from the fourth quarters of 2020 to 2021, they were forecasting the first quarter of 2022 would only show somewhere in the high teens for growth. While high teens revenue growth is very good for most businesses, it's not what Wall Street analysts had expected. On top of the poor guidance, a report came out that the US Justice Department is looking into Visa's relationship with other large fintech companies as part of an antitrust probe into the company. The Justice Department had already announced in March 2021 that it was investigating whether Visa uses anti-competitive practices in the debit card market. The DOJ's focus is looking at deals that Visa made with both PayPal and Square, where they provide a reduced transaction cost in exchange for promoting Visa card usage on their platforms. Now, I'm no antitrust expert, but this doesn't really seem to me like anti-competitive behavior. It honestly doesn't seem that much different from any loyalty program that already exists. Now, if they were doing something like providing transactions below cost, then I could see a pretty good argument for that. Personally, I just expect that this is going to end up settling and both parties are going to move on. Now, there's another huge story that broke about Visa pretty recently. It's their public fight with Amazon. On November 18th, Amazon announced they would stop accepting Visa credit cards in the UK. Amazon has become frustrated with the high credit card transaction fees that Visa cards are charging merchants like Amazon. Amazon says they believe the cost of accepting card payments should be going down over time due to advances in technology, but instead they continue to stay high or even rise with no additional value to its service. Amazon has offered £20 for Prime customers to switch from Visa to an alternative payment method. They've also offered £10 for other customers who currently only use Visa payment methods. On top of all of this, Amazon is even considering to go as far as canceling their branded credit card with Visa. Now, really quickly, before I get into the finances, most people probably knew this before clicking on the video, but I'm sure there's a few who didn't. But Visa doesn't actually make its money off of interest from credit cards. It's actually the banks that write the card that make the money off of interest. Visa makes its money off charging fees to merchants. So this is why so many credit cards will literally pay you in cash back or credits towards travel, gift cards, or stores. They can charge the merchant somewhere between 1 to 3% per transaction, and then to get the consumer to use the card more often, they pay out some of this fee through cash back or other rewards to the customers to incentivize use. Now, this is a really simplified explanation though, but this is what you need to know to understand Visa's business. So now that we have an idea of what's going on with Visa's business, let's take a look at how they're performing. So when we look at their revenue and net income, two things really stick out to me. The first thing is just how insane their profit margins are. I actually don't think that I've ever seen a company that takes in this much pure profit. Since 2018, Visa has sat right around 50% profit margins. The other thing that sticks out is how growth for Visa seems like it's stalled since 2019. This is mostly due to the pandemic, but to me, it was a little concerning to see. But after looking further into the issue, I found this really interesting chart that explains what's going on. This chart breaks down credit card payment versus Visa revenues. We can see using the solid blue line at the top that credit card payments are up 19% to just over 2.5 trillion in transactions from the most recent quarter. But revenue is about the same in the equivalent quarter in 2019, with both producing about 5.5 billion in revenue. The big difference seems to be this darker green portion decreasing, which represents international transaction revenues. These are transactions made in person across international borders, such as when somebody goes on an international vacation or a business trip and pays with a Visa card. I do want to point out that all the other revenues, the light green portion, is up a pretty good amount in the same comparison. To me, this says two things. One, the pain caused by slowing revenue growth seems to be mostly driven by a decline in international transaction revenues declining. And two, once international travel opens up again, Visa should have no problem returning to the same growth they saw before, since their other revenues have continued to increase, and we know it's a temporary condition preventing them from getting this revenue back. Visa breaks its revenue down into three segments. Service revenue, which are revenues earned from providing support services of Visa payments. The second is data processing revenues, which are from services to support and maintain transactions. And the third is international transaction revenues, which are from revenues from cross-border transactions and currency conversion. Looking at the revenue broken down by segment, we can see that the service and data processing segments are showing very good growth, but the international transaction segments is again where I see a slump. Once international travel opens up again, I expect this to come back. Now, when we look at the revenue versus expenses, we can see exactly why they have such insane profit margins. They basically have no costs associated with running their business. The biggest costs are actually their personnel for running the company, which is around 4 billion versus 24 billion in revenue that they bring in. Also, for those wondering about credit card rewards and why those aren't included in expenses, it's because Visa considers this a negative revenue, so this is all taken out before you even see the revenue numbers. But for those wondering, they pay out about 6 to 8 billion in rewards. Okay, so now that we have an idea of what's going on with their finances, let's take a look at what the stock is worth. So looking at their forecasted revenue and earnings, the current forecasts expect Visa to return to the growth that we've seen in the past, with revenues projected to grow from 24 billion to 36 billion by 2024. They also expect Visa to maintain their insane profit margins, with 20 billion expected in profits by 2024 as well. Looking at the revenue growth, Visa is projected to grow over the next 3 years between 17 to 12%. However, when we look at their net income growth, they have way higher projections between 21 to 16% over the next 3 years. I think an appropriate growth rate for them seems to be between 12% for the bottom end estimate and 18% for the top end. A 12% growth rate comes out to a fair PE of 27, and an 18% growth rate comes out to a fair PE of 46. Looking at macrotrends.net, we can see that this is actually almost the same range that they've traded in since 2014. So to me, this gives me even more confidence that this is where Visa will continue to trade at. Now, when we look at this valuation charted out, we can see that Visa's current valuation is extremely good, especially compared with all the other high growth tech stocks that have been trading around a year or two ahead of the trailing valuation. At today's price of $197, Visa stock has a 2024 upside of at least 265 by 2024, or 34% upside for the bottom end valuation, and for the high end range, around 452 per share, or 128% upside. Now, when we look at the current stock chart, we can see the entire chart is pretty bad, like the entire fintech sector. The stock is traded well below the 200-day moving average, but we have seen some pretty strong rebounds around 195 per share, which could indicate that there is more interest at buying at this price. However, it fell back down to 196 the trading day before I recorded this video, and there was very little volume. But this was also the day after Thanksgiving, so it's possible that less people were active on the stock market. So what happened to Visa stock? Well, basically they surprised analysts with poor guidance, and then there was also a large fintech sector sell-off. While Visa's business has seen a decline in revenue growth, this seems to be due to a loss in international transaction volume due to travel restrictions. And all of the other revenue segments seem to be performing pretty well. I have to say that I was really impressed by Visa's business. And now, after doing my research for this video, I plan to take my leap that I have on Alibaba and move it over to Visa stock. I think that Visa is an extremely solid, powerful business that's been experiencing a rough couple of years. But I see it as fully recovering as soon as travel restrictions open back up. To me, this sell-off seems to be one of the best buying opportunities of any stock that I've looked at this year. And it's possible that we may be starting to see some support in the sell-off, but I need a little more data to be absolutely sure. Now, before you go, I want to make sure that you guys check out this great video that I have up here next. And as always, thanks for watching.